Hello and welcome. You're watching Business Today Television. This is Market Today and I'm Sakshi Batra. With me Shail Bhatnagar. A very, very happy Diwali to all our viewers right here. Remember, we've actually seen this week at least on a much better footing than what we have seen in the last 4 weeks on the markets. Tuesday's session clearly belonged to the banks that lifted the Nifty for the second day in a row higher in trade. What we've also seen is that the Nifty ended above 24,450 odd points as well. ICICI Bank continued to lead the gains for the index for the second day in a row. A few good results coming in from PSU banks also lifted the index higher. Stocks like Canara Bank, Indian Bank, they boosted the sentiments across the board. State Bank of India was the top gainer amongst the PSU banking stocks as well. As we move into Wednesday, it will be the monthly expiry of the Nifty Bank as well. And remember that despite the 1,000 up move that we have actually seen on the Nifty Bank as of yesterday, the index is still down 2,000 points for the entire series. We'll have to just see how the momentum really carries on the expiry session for the Nifty Bank and whether the Nifty continues to get that strength across the board from various sectors to continue the up move right ahead of the Muhurat trading as well as on Diwali too. Many thanks for tuning in. Good morning, Shail. Looks like we are on a better footing and Diwali mood is finally coming in on the D Street.
Good morning, ladies and gentlemen. And yes, I think after a terrible 3 weeks, 4 weeks actually, as far as October's FNO expiry is concerned, we are probably on a surer footing than what we were on last Friday. So last two sessions have been very good for Nifty bulls. Gains have been minimal, but what has happened is that the selling has abated. You can also look at the FII numbers. Decrease is what is seen. Now the latest number is just a net sale of 2,100 crore rupees as of yesterday, and that net sale was accompanied by a very sharp rise in the Bank Nifty. For a change, ladies and gentlemen, we'll focus on the Bank Nifty first. The daily chart is right there in front of you. There was a 4,000 point correction on Bank Nifty, 54,500 to 50,500, and from then on you have 52,500 on the charts. Yesterday's high was 52,500. So a 50% retracement has happened, and a 2 percentage point uptick yesterday points to perhaps the next rally being led by the banking stocks, and all signs are there. Strong numbers by Axis Bank and ICICI Bank. Yesterday's rally on State Bank of India up 5%, plus very strong rollovers happening in the entire banking sector in the FNO space point to a better November. So the rally will be on Diwali, and of course in November, most likely to be led by Bank Nifty. Please keep an eye out on this one. Amongst the indices, it's the strongest. It's recovered its 21-day exponential moving average yesterday, the thick red line that you see on the screen, and is now headed for at least better numbers. Yesterday's very strong move on ICICI Bank, SBI, coupled with very strong earnings coming in from PNB, Bank of Baroda and Canara Bank, have lit a light of gains from below the Bank Nifty. Look at City Union Bank. Look at how Federal Bank has moved. Look at the changes that are happening in South Indian Bank. So these are all signs of a further rally that are going to take the markets higher as far as the banking sector is concerned. Sakshi will tell you that Nasdaq hit a record high yesterday. Therefore, the IT pack is also showing strength. Now, yesterday's top on the Nifty was 24,484. Let's see whether that one is breached. Remember, the battle will always be for the whole number, which is either 24,000 or 24,500, and then subsequently 25,000. So today's battle will be concentrated on 24,500. I expect a lot of short covering to take place. The Bank Nifty will be helping the Nifty. Tomorrow is the end of what has been a very long and painful October expiry. And of course, that will entail not only a lot of short covering, but it also matches with the end of the month as well. So a lot of mutual funds will be working overtime to boost their net asset values. So my understanding is that today and tomorrow will be a day of gains. Of course, there are festivities all around, and here's wishing everyone at home and all at the office a wonderful Narak Chaudas and Choti Diwali. Let's hope that the festivities and the brightness keep on increasing in our lives, and that our wisdom increases exponentially in the coming years as well. What do you need to do? As I have been telling you for the last 5-6 trading sessions, look at the SBI Nifty ETF. If nothing else, put in an extra sip in the equity diversified funds that you also hold, or buy a fresh equity diversified fund which has leanings towards large caps. Traders are now advised to be a little cautious on the short side. For the last 2 days I have been saying you have to be cautious on the long side, but now it seems that the base building of the Nifty after yesterday's fantastic performance, in fact the rally started only around 2 p.m. but from morning till afternoon, from a low of about 24,140 to a high of about 24,300 was the day that was spent till 2 p.m. and then the rally started, especially in State Bank of India. So keep an eye out on banks. I have a feeling that you'll see a record high on ICICI Bank today. HDFC Bank is in top shape, SBI is doing pretty good, and now is the turn for Axis Bank to start acting. We also have strong moves likely on Torrent Pharma. There is a block deal expected for about 2.5%, which the promoters are selling. Sakshi, it would interest you that in the last 20-21 days, we haven't spoken of any block deal. So this is a
Yes.
sign that the markets may have bottomed out. Yes, so these are signs that people need to watch out. There was a time when Sakshi and I used to point out
Every day.
3-4 block deals
Yeah.
a day. In the last 21 sessions, we have not done even a single one. So Torrent Pharma has now started the process. The counter is already at a record high, and this is something that is also pointing to strength in the market. Let us see. The deal should be somewhere in the vicinity of 2,500 to 3,000 crore rupees. Only the size of the block will be known, but this is what I am looking at. Strength in banks, strength in IT, specifically HCL Tech and Wipro. The charts are very good. You need to keep an eye out on these two, and of course better and improving mood. Sakshi, last 2 points. The US 10-year yield, although hit 4.32% yesterday, is now showing signs of facing resistance at July highs, so it should taper down, and that is good news for Indian markets. Crude oil is down below 8 EMA. That's a very big plus for Indian market sentiment, and all put together, festivities should begin on the Lal Street, Sakshi. Good days ahead.
Yes, let's hope the same. At least the US markets have finished mixed as of overnight. What we have also seen is that the Nasdaq composite continues to scale a new high. It was up by 0.8% in the overnight trading session, and the S&P 500 managed to eke out about 1/10% gains. However, it was the Dow Jones that closed lower. About 0.3% of a decline was seen on that one. For the Nasdaq, it's the big IT firms, tech firms that are reporting their numbers, and therefore there is a consistent up move on this index. Alphabet earnings were above estimates led by cloud business, and that really pushed up Nasdaq's performance overnight as well. Tracking the US markets, we've now seen Asia Pacific region markets also trade mix in the early opening trading session. When we look at the kind of moves that we are seeing across the board, Japan's Nikkei has been trading up almost 1% higher in trade. What we've also seen is that the Kospi, however, is lower in trade by about 0.6%. Hang Seng China both are down in trade. At least Hang Seng was down nearly 1% in the early trading session, and the Gift Nifty is indicating an absolutely flat start for the Indian markets. 24,447 at this point in time is what is being indicative of flat bias, flat with a negative bias start for the Indian markets right there. So we'll see how that really moves up as well. Now, apart from this, what we've also seen is that the overseas investors have been net sellers for the last 22 sessions, and in all they have offloaded 1.15 lakh crore rupees as well. in that entire sell-off. Domestic institutional investors, however, have stayed net buyers for 26th straight session. So overnight, yesterday's session, we did see FPI investors offloading stocks worth about 548 crore rupees. This is sharply lower from the massive amounts of sell-off that we have been used to of seeing from FIIs the entire October, and this also points to a something positive, that the quantum of sales by FIIs have come down in 3 digits now, and 550 less than that is what we've seen over yesterday. Domestic institutional investors, however, bought stocks worth about 730 odd crore rupees. Now, what we've also seen is that some of the earnings is something that we will be keeping a keen eye out on. Let's look at Adani Enterprises, the flagship company of Adani Group. It's reported September quarterly earnings on Tuesday. Company's revenue grew by 15.7% versus last year. Net profit for the quarter increased to 1741 odd crore rupees from 228 crore rupees a year ago. So good set of numbers that are coming in from this one. SBI Cards came out with the numbers just after the market close. Credit card firm posted a net profit of 400, marking a 32.9% decline from 602 crores in the same quarter last year. This is despite the profit dip. The company has seen an 8.2% jump in the total revenues, reaching 4,421 odd crore rupees as well. Deepak Fertilizers is another company that we should be looking at. The company has reported a more than threefold surge in second quarter profit at 214 crores. This is driven by strong sales growth across the business segments, and the fertilizer makers consolidated net profit has stood at 63.5 odd crore rupees as well in the same quarter previous year. Revenues from operations also grew by 12.7% to 2,753 crores. Marico came out with the numbers. FMCG major reported 20% surge in its consolidated profit to 432 crores. What we've also seen is that the company's total income has increased to 2,746 crores, up from 2,514 crores earlier as well. What we've seen is Maruti Suzuki's numbers have come in. The largest manufacturer of passenger cars. The earnings did show some kind of a miss on the expectations. Net profit and the margin front especially. Net profit has stood at 3,069 crore rupees for the company, whereas Maruti's net profit was also impacted by deferred tax expense of 1,017 crores during the current quarter. Now, what we have also seen is that Concor came out with its numbers. It recorded a slight dip in profits despite a 4.2% revenue boost. It announced a second interim dividend of 3.25 rupees per share as well. Mixed performance on the earnings front, net profit slipping by 0.6%. Meanwhile, the company achieved modest revenue growth, rising about 4.2%. So these are some of the earnings that I'm tracking, Shail.
Ladies and gentlemen, please put your hands together for Mr. Gaurang Shah, Senior Vice President for Geojit Financial Services, and a very dear friend who's waded through the markets for the last 30 years. He's held our hand over the last 18 months or so, trying to pick out winners and succeeded very often. Namaskar Gaurang ji, शुभकामनाएं फेस्टिविटीज़ की, और आपके साथ आज जुड़कर बड़ा अच्छा लग रहा है. नरक चौदस भी है और कल दिवाली की सारी धूम धमाके जो हैं वो मंडे से बाज़ार में शुरू हो गए हैं. अब बताइए, इतनी पिटाई के बाद क्या सब कुछ शांत हो गया? बेयर्स को चढ़ावा चढ़ चुका है, इसके बाद भी उनको कुछ देना हो तो बताइए, या फिर अब यहाँ से चढ़ाई की तैयारी की जाए?
I think there's some kind of a technical glitch. We couldn't hear Gaurang right there.
Gaurang, I think you are on mute. If you can unmute.
Network problem.
Yes, I think there's an audio problem.
Can you hear me? Can you hear me, Shail? Hello, can you hear me?
Yes, we can hear you with your lovely lal dupatta. I think that's what the bulls needed.
Well, I hope the color is not red on the market, though my dupatta's color is red. Never mind. बहुत बहुत धन्यवाद शैल भाई आपका. आपको, साक्षी को, बीटीटीवी के सभी दर्शकों को और आपकी पूरी टीम को धनतेरस, दिवाली और नव वर्ष की बहुत सारी शुभकामनाएं हमारे तरफ
Thank
से।
you.
प्रभु परमात्मा दीन देवियों को प्रार्थना है कि आप सभी का स्वास्थ्य अच्छा रहे और आपके धन में निरंतर वृद्धि होती रहे, ऐसा आशीर्वाद माता लक्ष्मी आपको दे। ये प्रार्थनाएं हमारी दिल से, मन से। अभी मैं आई वाज जस्ट लिसनिंग इनटू साक्षी रिगार्डिंग सम figures from the FIs and the DIs. So Sakshi was mentioning that till date about excess of 100,000 crore has been
Yes.
sold by institutional investors. She totaled the sell side figure of the FIs, but she did not mention the buy side figure of the domestic institutions. Quite sure. And I'm quite sure that that would be surpassing the sell side figure of the foreign institutional investors. Having said that, Shell, the last sell side figure from the FI on the higher side was 65,000 odd crores during March of 2020. And we know from where to where we corrected. And now, since they have made, गोरो ने एक नया सर्वोच्चम स्तर बनाया है बिकवाली का, इसके पश्चात हमने मात्र 8 से 10% का करेक्शन दिया है सेंसेक्स और निफ्टी में। 26,277 ऊपर की तरफ स्पॉट में निफ्टी हाई बना था और मेरे ख्याल से पिछले हफ्ते 24,150 या 24,200 के आसपास का एक निचला स्तर बना। मुश्किल से 8 या 10% की गिरावट थी। अब मेरी एक बहुत ही नम्र विनंती है सभी निवेशकों को और आपके दर्शकों को कि अगर आपके पास 10, 15, 20% जोखिम झेलने की क्षमता शेयर बाजार में नहीं है तो आपको थोड़ा बहुत आत्मचिंतन करना चाहिए आपकी रणनीति को लेकर के कि क्या आपको शेयर बाजार में आना है या नहीं आना है। यार, हम हमेशा आंकड़ों को देखते हैं, हम प्रतिशत को नहीं देखते। आप बेस देखिए सेंसेक्स निफ्टी का और फिर करेक्शन को प्रतिशत में आप तब्दील कीजिए तो मेरे ख्याल से आपको दिल की आपके दिल को तसल्ली मिल जाएगी। Having said that, I think I have a long list of buy side after this correction, especially focused on the large cap shell buy. And I also feel that select mid caps cannot be ruled out. But at the same time, I also want to say that don't think that after yesterday's and Monday's up move, that the correction is over. We have crucial events lined up. First of all, a little bit disappointing Q2 season. Secondly, we have the FNO expiry tomorrow, that is Thursday, monthly expiry. And more importantly, November 5th will be the date when the very intelligent US citizens will decide who's going to be the next president of the United States of America. So I think all these triggers are going to possibly keep little bit of activity highlighted on the higher side, and volatility and choppiness will also be at the higher side.
Very good morning to you, Gaurang ji, and wish you all the best for the festivities this season. You, your loved ones, everyone at Jurjit. I wish this year turns out to be a fantastic one, both at personal and professional level for all of you right there. And may Goddess Lakshmi keep blessing you all in abundance in at least the Ashta Lakshmi form, not just in one format as well. So you will get all the 8 blessings from Goddess Lakshmi. I hope that. And of course, it's been a DII street, if I may say, in October, in the entire month of October. While the FI has pulled out, DII has more than matched the figures, and they said that this is our street and we will be protecting it with full vigor, and that's what has been displayed, and I hope it continues to be that way. I want to understand from you, we are sitting at the Choti Diwali. What do you think an average retail investor must learn from last 1 month's carnage on the D Street, and what should they be prepared for over the next one Samvat?
My first advice to all those investors is that don't try to ape what the foreign institutional investors or what the foreigners are doing. You have to believe in the confidence, the courage, the capacity, the capability, and the endurance that we have in ourselves, Sakshi. I think we always fail to recognize the fact that we have maybe a little bit more gray cells than what the people overseas have. And history's witness, as the oldest existing civilization, and the kind of creations that we have made in the past, in the present, and in the future that we are going to do. So, my simple advice is that markets will throw a lot of unexpected situations and circumstances at you. You should not challenge the wisdom of the market. I have stopped doing it way long back, Sakshi. Don't try to challenge the wisdom of the market. Accept it and learn from it. That's the most important takeaway that I would want to give. And I will also say one thing. After and Indian markets have a history of these kind of corrections. We are not new to this kind of correction. But whenever the market has given you this kind of correction and then the market has gone into a base building exercise, once that base is in place, the market has also rewarded you with a new lifetime high. So this is the opportunity wherein you have to identify, or if you have your shopping list ready, I think it is time to pull it out of your wallet or your purse and at least start allocating 25, 30, 40% of the investable amount that you have. Bear in mind, we are not out of the woods. We may still face a little bit of choppiness and volatility, but all that will be buying time.
Fair point. Gaurang, banks led by ICICI on the private space in terms of earnings, and of course your favorite BOB and SBI has also started clicking. How do you see the banking universe at this point of time? Perhaps the only bright spark in the dismal second quarter earnings that we've seen so far. Picks from here and then your list that you talk about.
So I think all public sector banks have delivered quite a good set of numbers. I think including PNB yesterday or day before. Correct me if I'm wrong, Shail. So and there has been a slight better performance from PSUs compared to some public sector names like the Kotaks and the IndusInd of the world. HDFC Axis and ICICI did a good job, fairly good job. Very good job from a name like Federal Bank, which is a small to mid-sized private sector bank. Even a bank like City Union Bank delivered good set of numbers. IDFC First Bank, there was MFI concern on the balance sheet and the management has elaborated that next quarter should be much better than what we've seen in the second quarter. So, I mean, credit offtake is going to be there, asset quality is improving, provisioning is coming back, NIM should improve, interest rate cuts possibly end of this year or early next year can possibly give a tailwind support to the loan book growth. In terms of my investment ideas, Shail, like I said at the beginning of the program when I stepped in, I think large cap is the place where you have to be. So, look at names like HDFC Bank, Axis Bank, ICICI, State Bank of India, Bank of Baroda from public sector bank, including PNB and Canara Bank. They've done a good job. From the auto pack, I think M&M stands out quite tall. And of course, maybe something like a TVS Motor or a Hero MotoCorp. From the IT space, I'll pick one large cap, one mid cap. Large cap being TCS and mid cap being LTI Mindtree. Of course, not that we don't like others, but since I want to keep the list a little bit short and try to include more sectors, I have done this. FMCG, ITC, you mentioned ITC. I think ITC is one of the stock share which is not corrected as much when we saw this 10% correction, and the numbers are quite good. One more name that I would like to add in this space is, of course, Godrej Consumer Products. This company is also quite well placed to gain more market share in terms of the brand acquisitions that they have done, both globally and locally. And from the cement space, if I have to pick one large capacity player, that will be Ultratech, and a mid cap name, something like a Birla Corp, should be on your list. The list is very, very long, Shail. I don't want to confuse the viewers, but at least this should be the beginning.
Okay, got it. So that's the list that Gaurangji has shared with us. Time to welcome Mr. Mitesh Panchal now, who's joining right in to share his views on the technicals and the expectations of the markets right there. Warm welcome to you, Mitesh Ji, and happy Dhanteras, happy Diwali to you and to everyone at your office as well as in your family as well. Tell us any stock ideas that have come up fresh after slight recovery that we have started to see this week on the markets, and what's your expectation for the Diwali week on the markets?
Very much for the warm wishes. Happy Dhanteras to you, a BTTV family as well as Shail sir, as well as the panelists as well. To all our viewers, may this Diwali brings a lot of happiness and prosperity to their life. Now, coming back to the market, the first sign where the market gives the first sign which the market is giving us is that it's in the process of bottom formation. And the simple way to understand this is that when the market closed at the high point of the day, from the low point of the day, you understand that now the market is bottoming out. So since last two trading sessions that is happening, and the floor which market has built at around 24,000 has not been broken. So yeah, first and foremost thing is that market is in the process of bottom formation. And at this point of time, the high beta counters will give you a good risk reward ratio. Two stocks which stand out among this is first undoubtedly DLF. If you look at the chart pattern of DLF, recently it has made a low of 766, but it has not sustained. And since last 2 days, it is forming a high top, high bottom formation. This is a stock which one should buy at the current level because the risk reward ratio is pretty attractive. So at 832, it's a buy with a stop of 800 for the potential target of 880 and 900. Second stocks which we like, which is absolutely beaten down, is Canara Bank from the PSU banking space. If you again look at the chart pattern, the stock unable to sustained below the strong support level of 9090. Now the stock is trading at 103. So the psychological barrier of 100 has already been crossed. So we are of the view that from here, stock will give a very strong swing bounce. So with a stop of 98, one can go long in Canara Bank, Can Bank for the potential target of 110, 115.
Fair point, and two wonderful stocks informed by our dear friend Mitesh. Warm greetings and festivities to you, Mitesh. Let's pay a little attention to what the pre-open is saying. Lots of volatility. It's unlikely that Axis Bank will open 5% lower, but these are the prices right there in front of you. Axis Bank at 11.27. Look at ICICI Bank 1.2% lower, 13.15. These prices will settle for the better. HCL Tech is also opening 1.6% lower, 1841. This is an opportunity to get back into it. You have HDFC Bank 2 percentage points lower. These prices will correct and correct substantially. What is looking good? Tata Motors 855. This is bottom fishing happening. The stock has corrected very, very sharply, and about time that you see nice uptick on this one. TCS is in the green. Gaurang has made his preference known, 0.5% higher. We'll very, very quickly shift into the NSE 500 space and look at winners. KNS Technologies, very strong set of earnings, 8% higher, 56.60. You have Deepak Fertilizers going hammer and tongs with gains, 5.5% higher, 1300. You have a strong move post earnings coming into Voltas, 2.8% higher, 1820. And of course, stocks like Power India, Go Digit are also showing strong gains. What are in the most active counters? Well, it's starting with Tata Motors. This is really interesting. I'll ask Mitesh on this one. And of course, post earnings, Adani Enterprises 1.2% higher, 2885. Remember, this is a stock which is well below its June 4th highs and actually June 4th lows. And that itself is an indicator of some kind of value emanating here. What else is in the green? Hindustan Zinc, we've marked it from 517 onwards. It's 554 for you. Strong gains. Mitesh, coming to you, a quick one on Tata Motors. Is the worst behind us?
Okay, so if you look at the chart pattern of Tata Motors, probably it's a lower top, lower bottom formation since last 5 weeks in a row. And now the strong support emerges at around 800 level. So yes, if you have the stomach to digest high volatility, probably you can get into the trade because still we'll have to go through extreme volatility into the counter. Probably we are of the view that the best price to add is on the downside between 820 and 810 and 820, and on the upside once the trend confirms that is above 970. Both the ranges are far away, but that is how we place our bets between 810 820 on the downside. If not, then on the upside once the trend gets confirmed above 917, then only, because after that the marathon run in the stock will again start, in which the first target will be 1020. So yes, these are the two ranges which we are looking for.
Okay. Let me get Gaurang into the conversation. Let's focus on the EMS plays. Gaurang, once again, we've seen Dixon come out with good set of numbers, and now Keynes has also reported strong set of numbers this time around. Double-digit gains coming in on both profits and revenues. 87% surge as far as the profits are concerned, and revenue up by about 60% as well. How would you really look at Keynes Technologies versus Dixon, both valuation-wise, and what is in front of them?
So I'll just comment on this sector and the space, Sakshi, because undoubtedly both of them are very strong names, very big names, very capable companies. Dixon being a much larger and a wider player compared to Keynes Technologies. Opportunities are one too many with the government policies and focus shifting from imports to self-reliance and make in India, made in India themes that has been unrolled for maybe a couple of years now. Uh, uh, Themes like making India more relevant in the global arena. Production link incentive scheme also helps this particular sector. And of course, given the fact that these two stocks have given you a fantastic rally over the last 6 months, 1 year, I think now the challenge for the management will be to deliver on their capabilities and capacities and translate all of that into numbers quarter on quarter, 6 months by 6 months, and maybe YOY also. If anywhere there is a little bit of slip, one has to prepare for maybe a decent correction for that short to medium kind of a time frame. But given the outlook, well, it looks to be very, very strong. Remains to be seen how do these companies deliver.
Mitesh ji, Nasdaq just hit a record high yesterday, driven primarily by alphabet numbers. What, according to you, are one or two stocks in the IT space in India that are mirroring that strength on the charts?
So I don't know the one-to-one comparison, Shailji, but I think one stock which stood absolutely strong within the IT pack is Coforge. If you look at the chart pattern for Coforge, recently it had a very sharp fall from the level of 75.85 to the level of 67.10, and from there there is no stopping. Since last 3 days, the stock is consolidating. I think within the IT space, this is perhaps the second or third stock which will be gearing up for a 5-digit 10,000 mark. So I think within the IT space, we are very bullish on Coforge at present.
Okay, got that. Let me get back to Gaurang and also understand from him how are you really looking at this entire FMCG space as of now? Marico came out with the numbers, and I wanted to understand, we've actually been hearing from these top FMCG giants on how they are feeling the pressure when it comes to the urban demand and the volumes right there, and how they are penciling in a muted festive season as well. How are you looking at this entire consumption space and the FMCG sector?
So one of the sectors that I gave as a wish list of a model portfolio was FMCG, wherein I mentioned ITC and Godrej Consumer Products, Sakshi. Accepted the fact that there is a little bit of disappointment in terms of volumes growth, not only from urban tier 2, tier 3 cities, but also a little bit of lackluster kind of a demand. Supporting the top line comes in from semi-urban and rural India. Primarily because of the kind of situation that has unfolded. We had normal monsoon almost, but in some places it was excess, which led to flooding, which led to crops which were standing in the field. They got damaged, they got washed out, and that translated into not so much better than expected earnings for semi-urban and rural India. And whenever that happens, actually, I think the ultimate or the direct impact of that is that FMCG sector takes the hit on the chin with volumes by default going down, and then it impacts the earnings also. Having said that, this second quarter earnings was just after the monsoon. I think the real picture will be much clearer in the third quarter earnings, and of course the festivities that are lined up. This will reflect on the in the third quarter earnings. Short to medium term, if your question is whether we can expect any kind of bounce back, pull back, or some kind of an outperformance, well, that looks a little bit difficult. But long term, we remain quite positive on the entire FMCG theme. And I think there are close to about more than half a dozen companies on which we have fundamental coverage.
Okay, ladies and gentlemen, the Nifty settled 95 points lower. Remember, this is not an invitation to go short in the market. It's just testing 24,350, maybe even 24,300, and then let's see where it goes. The Bank Nifty on a back foot, 332 points lower. Remember, for the last two sessions, we've added 1,500 points, so nothing to be worried about. It's going to be a quiet opening. Let us see how we go from here. Mitesh, this one is for you. Within the banking space, which do you think is the strongest stock amongst index heavyweights in the top 5 stocks, which is ICICI, SBI, Axis, and maybe HDFC Bank? Where do you see strength?
Undoubtedly, State Bank of India, because the kind of movement which it has witnessed yesterday, that is unusual. If you're looking at the volume comfort, it is giving us a lot of confidence. So I think in one move only, the stock has surpassed its high, which it has formed on 21st of October 2024, that is 826, and it has comfortably closed above that. So now the next target for the bank is around 890 to 910. So the comfort both from volume and the chart is coming into the State Bank of India. One should go long definitely at the current time.
Okay, let's look at some of the pockets that are still holding up in strength in the pre-open trade. It's small caps, FMCG space, media stocks, that's all among sectors that are showing some strength. Among the gainers, you have stocks like JSW Steel, Coal India, Adani Enterprises, Nestle, Asian Paints. These are the kind of stocks that are still holding up and about right now. But getting on the discussion with Gaurang right here. Gaurang, any pockets where you believe the first signs of recovery have already started, and this is where one needs to really press the buy button on, starting now in the markets?
I think so. There are quite a bit of contribution coming in. Even yesterday's and day before yesterday, one pocket that I would definitely would like to focus is the power generation, power transmission, and power equipments. You know, there is a very hard-hitting fact that is in front of our eyes, and that is that 77 years of independence, and we are still a power deficit country. And year on year, the demand for power is going up. You have development and infrastructure creation happening around the clock, 365 days. All this will eventually, you have new capacities coming up, you have new opportunities coming up, you are aspiring to become the next trillion-dollar economy. You are also aspiring to make India a manufacturing hub, a global supplier. Tell me something, Sakshi, can we do this without two things? Liquidity, that is finance, loans, credit line. And the second most important thing is power. We can't go there. So banking remains to be a theme. We discussed banking. Power was one sector that I did not elaborate, but thanks for asking me this. So one theme that I would look at is power generation, power transmission, and power equipments. The second theme that I would possibly look at is capital goods engineering. And the third one, which has been very close to my heart, is the defense. Yes. I think we've seen a very sharp correction, according to a lot of people. According to me, it is not so much, because these stocks have rallied 50, 100, 150, 200%, or maybe more. And from those levels, they have corrected hardly 20, 30, 40% or thereabouts. I stand to be corrected if I'm wrong.
Correct.
Okay, ladies and gentlemen, we are now seconds away from what is going to be a good start for the market. Okay, we have a green tick on the IT index, 21 points higher, 42,028. The Nifty is opened on a slight back foot, 64 points lower. The Bank Nifty closed 330 points lower in pre-open. It's now down just 137. This is how the indices are shaping up. Let's look at individual stocks. First off, ITC of the block, 1.8 rupees higher, 489.65. TCS is looking good, 17 rupees 70 higher, 4092. What is ICICI Bank doing? Okay, it's 3 rupees 20 lower, 1328. I won't be worried. SBI 2 rupees lower, 830. Won't be worried at all. Axis Bank 4 rupees lower. Remember, today is also the end of the account for Bank Nifty, so you will see some kind of back foot kind of a move. 5 rupees lower on HDFC Bank, 1747. Reliance is 13 rupees lower, 1326. Weakness in Bajaj Finance, 42 rupees lower. Kotak Bank, 12 rupees lower. Okay, now let's look at stocks that are in the green but are trading higher. Maybe some bottom fishing happening in Maruti after disastrous numbers. 1.2 percentage points higher, 11,267. What are the gainers in the list? Okay, you have Capri Global 9% higher, 200.50. Marico, strong set of numbers, 7.7% higher, 677. Deepak Fertilizers, KNS Technologies, 4% higher. You have a strong move coming into Karur Vyasa Bank, 2.6% higher. This is fairly okay. Nifty is now slipped 100 points lower, so 24,350 is being tested for the moment. And let's look at the most active counter. So Torrent Pharma off the block. This is the block that I was telling you about. 3 percentage points lower, 31.20. This is a 2.5% stake sale that is happening from the promoter's side as far as the block deal is concerned. So this has happened. Let us see how the moves are now. Coming to you, Mitesh, a quick one on Marico, 7 percentage points higher. Is this something that we chase or do we stay away?
Okay, so as far as Marico is concerned, let me look at the chart pattern from the weekly perspective. So if you are looking at a weekly perspective, it's a lower top, lower bottom formation for 3 weeks in a row. So no need to chase. This might be a one-day bounce. So let us see whether the bounce is getting sustained or not. Because at this level, one should not get into the stock. Around 650, 630 is the level where we can get into the stock. So wait and watch for this.
Okay, auto space is something I'll go back to. Gaurang, you were talking about some of the two-wheelers where you're bullish on. Look at Force Motors. It's risen almost 16% in the early trade. This is after the earnings have come in. Net profit has risen by 44% to 135 odd crore rupees for the company. Sales have risen by 7.7% at 1941 odd crores. We've been hardly discussing Force Motors when we discussed largely all the two-wheelers and the four-wheelers, but how would you really look at Force Motors versus the other companies in the commercial four-wheeler space?
Well, this is a little bit of significant play with respect to the supply of engines, Sakshi, to some of the niche marquee international automobile manufacturing companies. Along with that, it is one of the most dominant player as far as the mid-size 12-seater, 10-seater, 15-seater commercial small buses are concerned, or travelers, as we call it, tempo travelers. There was a time when this stock rallied phenomenally on fallback of the assignments that it got from the large international automobile manufacturing companies. Then it went into hibernation, and now it's again back in the spotlight with the kind of demand. And I was quite surprised, since you're talking about automobile companies. I think I was listening into the Audis and the BMWs and the Mercedes outlook for India. and they are quite gung-ho over India. I mean, they have estimates of reaching a new high in terms of sales figure for the Indian subcontinent. Increase the focus also, undoubtedly. I was traveling last week. In fact, last 2 weeks, my apologies, I couldn't be with you guys because I was traveling back to back. And I happened to travel by road. And I happened to see the warehouses where they park Audis and the BMWs and the Mercedes of the world. And their parking lot was full. There was not a single space that was empty for a single car to be added to that entire lot. So that's the kind of opportunity that is. As answering your question about force matters, I won't give a direct answer buy, sell, and hold because we don't have a coverage, but it's one of the strongest players.
Right. Gaurang, amongst us four, you and Mitesh are the only ones who can buy Beamers and Mercs on Diwali bonuses. Sakshi और मेरे बस की तो है नहीं, लेकिन we can buy Force Motors. You know, you must. Somebody long ago told me buy an appreciating asset, don't buy a depreciating asset. So Force Motors is probably an appreciating asset. We'll take Mitesh's view on it. Top performer today, 18% higher, and this is already traded about 29 crores of shares. Mitesh ji, Force Motors.
Yeah, so look at the quarterly chart. Since after forming a top in the range of around 10,277 for two consecutive quarters, the stock had a decent correction. So this is nothing but a trend reversal. So probably what I will see is a sustainability of the trend. One should go and buy it. The reason is simple, that stock has recently formed its bottom between 6150, 6200. Today's up move is probably where the smart people are buying, and I am of the view that the trend will sustain. So it's a clear-cut buy even at 18% upside.
Okay, got it.
Okay, ladies and gentlemen, we are now at 9:22. Let's just take a detour into what is happening in terms of gains. I'll request Mitesh to give us a view on Poonawalla FinCorp as well. I believe a lot of repair and damage a lot of repair is happening on the chart as well. 3.5% higher, 351. Remember, this was thrashed beyond recognition on its earnings when a lot of numbers in terms of provisions were raised. In terms of new highs, ladies and gentlemen, Coforge going strong. Mitesh has already made his preference known. Strong move coming into City Union Bank. This is high beta, low ticket, 177, and again earnings led. You have a very, very strong view coming into CRISIL, 2.5% higher, 53.32. Mitesh, to you, Poonawalla FinCorp and City Union Bank.
Okay, so starting with the Poonawalla FinCorp, since last two trading sessions, early signs of a bottom formation. So very strong volume since last 3 days, particularly since last 2 days. It's a hard bottom formation with volume, which is giving a good amount of comfort. And I think I'll wait for the level of 365. Once it crosses, probably we can again once we will again go back to the level of 420, 450. So definitely at the current level, one can go long in Poonawalla FinCorp, but be very clear with the fact that in the next 2 or 3 days, probably a correction will also come because this is a trend reversal. Coming back to City Union Bank, after forming its bottom in the range of 158 to 155, a pretty strong show in last 2 days, and now the stock is comfortably trading above its immediate resistance level of 172. So yes, this is also a buy with a stop of 170 for the potential target of 210, 220. Stock has now, Shailji, entered into a new trading range in which on the upper side, the long-term target, which means in the next 9 to 12 months, probably there are chances that the stock will test 240 odd levels as well.
Okay, got it. Gaurang, you did talk about defense, and I'll bring up a few stocks which are now buzzing sharply higher. Bharat Defense is up 5%, DCX Systems is up 5%. Garden Reach Shipbuilders is up 3.5% today. Data Patterns, BEL, Cochin Shipyard, Mazagon, they're all buzzing in trade today again, and that probably has to do with the presence of yours on our channel yet again. That finally these stocks are again seeing strong green. Tell us, Gaurang, for those who had missed the opportunity while this stocks were in thickest of the trade, and now when some of these stocks have corrected 20-30% odd, is this probably the best time that one can actually look at in hindsight to take an entry here if one has a long-term horizon in the likes of Cochin, Mazagon, BEL,
Well, I'll restrict my comment to the entire sector, Sakshi, because
Sure.
I don't think it'll be prudent on my part to give any stock-specific recommendation. And I would be unfair if I do that. For me, the entire defense theme is a sector which is going to grow at an exponential rate for the next 3-5 years or maybe more, given the kind of orders that all these companies have. And this order book is growing quarter on quarter, 6 months by 6 months, and year on year basis. Having a good order book is a good news and a soothing music to the ear. But more important is that how capable you are to execute that order book and translate them into earnings and profitability, which is the crux of the theme that my thought process comes from. So I believe that this is a great time. The only problem is, Sakshi, that people look at short to medium term swings in the sector, not recognizing the fact that these sectors have gone up to 50, 100, 150, 200% or more over the last year and a half, 2 years. And after this correction, whether this is the right time or whether this is the right price, well, honestly, I am not qualified and I don't want to waste my time doing all that because I lose out on the opportunity. If you are really, if you are committed towards the sector, but you are a little bit concerned in terms of the volatility of the price and the correction, then at current levels, I think you should at least have the courage to deploy some part of the investable amount that you have and then carry that theme forward on to the next correction possible and add on to the stock. Don't look at this sector for the next 3 months, 6 months, 1 year, 1.5 year, for the love of God, because you will not end up making or creating wealth that you would if you extend your time horizon to maybe 3 years, 5 years, and maybe more. And not to forget, I'm not recommending any kind of mutual fund themes over here, but there are 3 dedicated defense-related mutual fund NFOs that had opened up, which garnered a decent amount of amount. So look at this sector as a jewel in your portfolio.
Fair point. And we've always chases. Most media organizations have made this habit to chase momentum, but not to suggest the same stocks when they've corrected 50%, 35%, 33%. A sensible buyer is the one who buys around 200-day DMA, below 200-day DMA on the weekly charts, on the monthly charts. And this is the reason why, at least I consistently ask about what's the update on Tata Motors, what's the update on Reliance, what's the update on L&T. These are the stocks that will reclaim their all-time highs no matter what you do. And it's the buying point that is only in your control, nothing else. Sakshi, I, Mitesh ji, Gaurang bhai can't do anything to end the war in Ukraine, in Russia, in the Middle East. But what we can do is control our buying instinct and buy only when it makes sense. And it makes sense to buy when there is pain on the last street, when the quality stock that you always wanted to have in your portfolio is trading around maybe 21-week lows, maybe below 200-day DMA. That is the time to be fearless in the market, and probably that is upon us when you see prices in defense counters. But for the moment, Mitesh, what is asking your opinion is Maruti, 2% higher, 11,308. Is the worst behind us?
Okay, so as far as Maruti is concerned, no comfort on the chart. It is too early for us to say that the worst is behind us. For the technical level, you can always play with the recent low of 10,742. You can put that as a stop and go long into the stock, but that will satisfy you to just to take the trade. But if you're talking about the trend reversal level, it is far away, about 12,300 only. One should qualify the stock as a serious trend reversal, and then there are possibilities of forming higher top, higher bottom formation. So I think Selji, for any stock you can, I mean, buy at any given point of time with the stop loss, not an issue. But as far as Maruti is concerned, we don't think so that the worst is behind us. Probably now the stock will spend quality time in a consolidation. That will frustrate you. Vis-a-vis, there are certain pockets which will give you a good amount of gain. So, for an example, if I have to draw a conclusion here between Maruti and Tata Motors, I will prefer to go with Tata Motors. The possibility of bounce back and the possibility of making money in the swing trade is higher in Tata Motors as compared to Maruti.
Right. Let's look at a few stocks which are buzzing sharply higher. Muthoot Capital is up 11% in trade. Poonawalla FinCorp is up 7%. We also have brokerage houses that are continuing to gain momentum. Anand Rathi Wealth up 3.5, 361. WAM also up in trade. Nuvama Wealth is also buzzing higher in trade. Georgette Financial Services, which is Gaurang's company, is also buzzing sharply higher. Gaurang, do you think the best way to play the long-term markets would be through these brokerage houses firms? Should one continue to invest in some of these as SIPs?
Sakshi, I will start typing my resignation letter if I answer this question on specific. But let me again restrict my comments to the sector. And I will not only include the intermediaries, but I will also want to include the services providers like depository services, platform providers like enabling trade execution. This is not a recommendation. I'm just naming the companies which are associated with the stock market. So, for example, when it comes to platform providers, we have BSE. When it comes to depository services, we have companies like CDSL. Soon, most likely, if the approvals come through, we'll see an IPO from NSE and, of course, NSDL also, but that's a waiting period. Lots need to be done over there. Then you come down to intermediaries like brokerages. My simple logic is, again, no rocket science over here. If you believe that India is going to become the next $1 trillion economy, if you believe that India is going to become the large manufacturing hub, outsourcing to the world, and if you believe that Indian stock markets on a conservative side are going to grow at a 12 to 15% CAGR, then by doubt and without any doubt, all these services providers, platform providers, intermediaries are going to do well because we have a large growing base of retail investors from hardly lower single digit depository accounts. We are at maybe about 15 crore plus depository accounts today and counting. We have large footfalls increasing as far as SIP mode is concerned, along with lump sum investment, and the participation is going to grow up steadily. So if I have to believe all these things and I have to put these things into perspective, all these ancillary sectors which enable stock market growth will definitely do well. And I'm sure I'm not going to type my resignation letter now.
No, we don't want you to unless you want to come to Delhi this side. And you will be very welcome, but then, the multiples of what you make will come down substantially. Nevertheless, now let's look at the market. We have a green tick back on the Nifty IT index, 42,045. The Nifty still struggling around 24,350. Let's look at the pullers and draggers, and this is primarily on the bank Nifty components, because you've seen such a sharp rally over the last two sessions. You are seeing a bit of profit booking happening, and that's the reason why you have ICICI Bank contributing a negative 30 points, Axis contributing a negative 10 points. This is just intra day and maybe for a day. Let's see what happens from tomorrow onwards. Maruti taking it away, the top contributor on the Nifty, 7.5 points. L&T contributing 5, TCS contributing 3, ITC and Wipro contributing 2 and 2 points respectively. So it's the banks that are seeing some kind of profit booking over the last couple of minutes that are pulling the Nifty lower. Profit booking continues on Sun Pharma. This is earnings led. 2 days ago the numbers came, but nothing to be worried about. The stock is near record highs, consolidating after a fairly steep run up. What else is at all-time highs? Any stocks that I would like to take their names on air? No, I will avoid these names. We've already marked Coforge many times. 7830. This has also been a pick that has been highlighted by Gaurang many times, and even today by Mitesh. In terms of lows intraday, anything that I would like to mark? Yes, profit booking happening in 5-star home finance, 7% lower, 812. You have Star Health slipping 5% lower at 508. Any other names that I want to take on air? Yes, KCP Sugar Industries 3.7% lower, Cipla down 4%, Dr. Reddy's 3% lower. So pharma is getting cleaned out today. Let's look at the advanced decline ratio in the market. 1550 shares in the green, 680 in the red. So it's a nice 2.5:1, which essentially means for every 2 stocks that are falling, 5 are on the uptick. Nifty Pharma is the top losing index, down 1.6%. And of course, small cap index is the top gainer, up 3%. So this is the broader structure of the market. You have profit booking happening on Nifty Bank, now 400 points lower. Nothing to be worried about. A 1000-point rally yesterday, a 500-point rally on Monday, and some of it is being taken away by the monthly expiry. Mitesh ji, anything that you have observed?
Yes, sir. 2 stocks. First is Aarti Industries, 516 available at a very attractive level. So one should go long in Aarti with a stop of 505 for the potential target of 530, 540. And second, within the PSU bank, very fine print on the chart, both daily and hourly, and probably hourly and 15 minutes is giving exceptional comfort, is BHEL Bhel. So at 237.55, Bhel is a clear-cut buy with a stop of 232 for the potential target of 245, 250. So Aarti Industry and Bhel looking very promising.
Got it. Right. Let's get Mitesh you to talk also about some of the broader market performers, including the railway related stocks that are now buzzing in trade. RVNL is up now 5.5%. Other stocks also on the move here in trade as well. So stocks like IRFC is up by 3% as well. IRCTC is up by 1%. Do you think this bounce should be really looked at as an entry point, or do you think the recovery will be long drawn and therefore one should be very careful when one looks at railways even now?
Absolutely. Second part, which you have narrated beautifully, is the game in the town. I mean, all those stocks, whether it's a defense or a PSU, where you have seen more than 30 or 40% of a correction, don't pick them up right now, because it's just a bounce as per our opinion, and there is a long way to go before they test their all-time high. So again, advisable to get out of these stocks even at a bounce, or don't try to average it at a lower level. As you know, Sakshi, after every meaningful corrections, the players in the market changes hands, and the definition of a wealth creation also changes. So I think the theme which has gone right away in the first half of this calendar year is not necessarily which will get repeated in the second half of this calendar year. So advisable to avoid these stocks right now. Probably there are certain very interesting stocks and chart patterns within the large cap, within the MNC stocks, within the FMCG pack, within the pharma, which is available at an attractive level. So one should go for that, not for these beaten down stocks.
Okay. Got
940, ladies and gentlemen. Taking a real smart move is Wipro. I have mentioned this stock in my opening commentary as well. This is something that needs to be looked by Mitesh. Mitesh, what are the charts telling you? A strong move now coming towards 570. The gap that was there on earnings made in July last year, first quarter earnings, has now been sufficiently filled. What are the medium term charts telling you on Wipro?
Yeah, so the gap which you're talking about was formed on 19th of July 2024, from in which the stock has tanked from 580 level to the tune of 500 level in just a matter of 2 days. After that, there is a consolidation, and today and tomorrow, the kind of chart pattern which it has formed is giving us a clear breakout. Now the stock is comfortably trading about its immediate resistance level of 563. So yes, definitely, this is a very good pick by you. One can go long at the current level with a stop of 560 for the potential target of 590 and 600.
Okay. Got it. Nitish, the other space that I wanted you to focus on is again the fertilizers and the chemical space as a whole. And to tell us really, is this space going to be an outperforming one in the near to medium term future? Should one be really looking at this space? It's been a space where there has been a lot of debates, both sides of the coins, a lot of confusion of late. But are things finally settling for the up move now within the fertilizer and the chemical space?
Looks like Sakshi, and the one stock which stand out is Chambal Fertilizer. If
Yeah.
you look at the pattern of Chambal, I think after a recent fall from the level of 551 on 3rd of October, the stock has recently formed its bottom in the range of 443 to 450. And I think now there is an early signs of a bottom formation, because this is probably the second day in a row where the stock is moving up with a strong volume. So yes, Chambal Fertilizer is looking very interesting. Stop losses will be bit far away so that you can digest the volatility. So 440 should be your stop loss in the current trade. One can go long at the current level of 471, eyeing at 500, 520 plus levels in next 10 to 15 trading sessions. So this is again a very good thing which you can play as a swing trade.
942, ladies and gentlemen. It's a nice smart uptick, and as I had mentioned early morning, the Nifty was testing 24,350, 24,300. Now we are above 24,400, and probably the fun starts now, because you have the IT stocks coming to the aid of the Nifty. Look at how the FNO space is when it comes to the IT stocks. We've marked Wipro, we've marked both HCL Technologies and Coforge, but it's TCS 0.5% higher. It's Infosys that is recovering from the day's low of 1824, now at 1833. Look at HCL Tech. Day's low was 1851, now at 1859. So these are the signs that need to be looked at, and perhaps a view on 24,400 Nifty call for the next week. Let me just get that number in. Mitesh, I'd like your help on that one. Let's look at maybe I'll have to look at the weekly one. Just a moment, please. 7th November, 24,400 call is somewhere like 267 rupees. Would you stick your neck out on this one?
Wait for today. I think the second half will give us a better clarity. So at around 450 rupees, we'll wait. Probably you can get it at around 210 to 120. Because as you know, as the day progresses, and if it's volatile, since it's a next month call, so the time value will be pretty high. So you will get at a bargain level. So probably wait for 200 to 210 rupees.
Okay. Right. So, Mitesh, some more stocks we will be focusing on. Let me just bring up a few stocks. BSE is moving. 4.3% higher in trade. Remember, this has been an erstwhile favorite when the stock market, capital market related stocks had been on the move. It's again catching on the momentum afresh, 44.68 currently. Is BSE something that one should chase for momentum right now, Mitesh?
Absolutely, absolutely. And the simple reason is that if you look at the chart pattern right from around the month of August, where it has formed a bottom at the range of 23, and from where the marathon run has started, after forming its intermediate high at 4,200, again the stock went into the consolidation, again made a high of 49.89, again now making a consolidation, and probably will be now going forward, will be heading towards 5,200, 5,300. So the pattern of the stock goes like this, that after every up move, the stock spend a quality time in correction, mild correction and consolidation, and then making a significant higher highs as compared to the earlier high. So the pattern will continue, and I think probably the stock will trade around 5,200, 5,300 in next 3 to 6 months. So yes, definitely this is the stock which one need to chase.
Okay. Got it. So that's as far as BSE is also concerned. There are several mid-cap stocks that are buzzing now. We've already discussed Poonawalla Fincorp. Marico is further picking up momentum. You can see a 5.5% move on this one. Entire FMCG sector is also buzz with gains right now. Paytm is on the move, 2% higher in trade. We also have stocks like Mankind Pharma that's now pulling up within the mid caps, 3.5% up for this one as well. Torrent Power, we have IGL also pulling up in trade, LIC Housing Finance, Sundaram Finance. So some of these banking majors, Bank of India from the PSU banks again, these are some of the counters that are buzzing within the mid caps basket as well. If I have to ask you, Mitesh, from the mid and the small caps basket, are there any key stocks that are coming back onto your focus after the recent 10% correction from all-time highs? Are things looking attractive anywhere?
Right now, the small ticket stocks which we are looking at, or perhaps the stock which we are looking at is, I think one is IFCI. So the stock had a very strong correction from the level of 90, and the stock has formed a recent bottom at around 50, 52. So now the stock is up again and will come back in the action, and sooner than later will cross 62. So this is the first stocks which we are looking at. Second, which we are looking at is Infibeam Avenue. Again, Infibeam, if you look at the chart pattern, has corrected from the level of 41 and now making its a strong bottom in the range of 26, 28. So at the current level, Infibeam is also a buy. So from a small ticket, these are the two stocks which we are looking technically, which looks pretty promising with respect to the risk reward ratio. So yes, one can go long in IFCI and Infibeam at the current level.
Stock I'd like to point out after its earnings performance is Container Corporation of India, Concor. This is a portfolio bet, and amongst its many positives is that it is now available at its this is a 100-week price, 785 for you, actually 820 for you. Your views on Mitesh, this one, the medium term charts. Gentlemen, the all time high was 1182. You are getting the same stock at 819. Mitesh ji.
Yeah. So I think if you look at the monthly chart, it has a very severe correction from 1180 all the way to 809. So yes, this is absolutely a bargain buy at the current level. A very strong support between the level of around 800, 750 to 800. One should definitely start accumulating the stock or going long at the current level. The intermediate resistance came at around 880, which the stock will comfortably pass going forward. So yeah, one should go long at the current level for the potential target of 880, 920.
Okay. Got that. So that's as far as Concor is concerned. Auto ancillaries are buzzing in trade. Mitesh, if we look at stocks like automotive stampings, almost up 7% in trade. JBM Auto is buzzing sharply higher today, erstwhile favorite within the auto ancillary pack, 6% higher. Precision Camshafts has been on the move over the last few weeks, and it continues to surge even today, about 5% up for this one. Lumax Auto, Ask Automotive, Talbros, these are the stocks that are on the move. How would you really look at these auto ancillaries? Where would you really take your best bet at?
Okay, so within the auto ancillary space, I think Lumex Auto is looking pretty interesting as of now. Around at the current level, one should go long into the stock for the potential target of around 20 to 25% upside. Around 620, 630 is what we are looking at. Stop should be at around 490. So within the space which you have discussed, Lumex Auto is on our radar, and one should go long in that stock right now.
950, ladies and gentlemen. It's now turning out to be a quiet kind of a day. I see Manappuram Finance, and we've been talking about this from 135. Again, this is buying the dip. Mitesh Bhai, Manappuram Finance done in because of RBI regulation that came in a couple of days ago. We saw a low of 138, but now at 157, showing signs of strength perhaps. Anything that you can comment on the chart?
So above 162, the stock is looking interesting, because if the stock moves above 162, Shailji, probably there are chances that the stock will form its bottom at the recent lows, and probably from there we can see a level of 178, 180. So no need to touch it right now. Let us touch above only. It crosses first resistance level, pretty strong one at around 162. So the stock is a buy above 162 only.
Got it. Let us continue to look at some other movers and shakers at this point in time within the broader markets. Let's take a few names. Dynacon Systems is up 12%. We have Jain Irrigation Systems, that's 11.8%. Suryodaya Small Finance Bank is up 11% today. We have Muthoot Capital, which we have highlighted. Reddington, after a long haul, is 8% higher in trade. Then you have Jain Irrigation Systems. So some of these irrigation majors definitely up on the move. Ceylon Exploration. You also have stocks like Lakshmi Organics, that's also up and about. So some of these buzzers in the broader markets that are upwards of high single digits and double digits in trade today. F&O space is largely hooked by Marico, Chambal Fertilizers, BEL, Coromandel International, Adani Enterprises, Oracle Financial Services, Info Edge. These are the top buzzers. Within the PSU pack particularly, with the index is up 0.5%. Again, we have discussed the railway space, BEL, Concor, BHEL. These are the stocks that are coming back. Let's discuss BHEL with you, Mitesh. How are you placed on BHEL right now? Some momentum came back. It's continuing right here. Do you think it is a good time to take an entry, fresh one?
Yeah, we have just now before 15 minutes recommended this on the channel only. So yeah, BHEL is a comfortable buy. We have recommended two stocks, RT Industries and BHEL, right? So BHEL is one of them. 238 comfortable buy, 230 stop loss. One can go long for the potential target of 250, 260.
Okay, 250 to 60 could be seen on this one. Let's look at the Nifty next 50 names as well to see where else can we see some momentum coming in. Indigo is coming back finally after thrashing because we've seen the earnings which have disappointed. About 0.7% of gains can be seen here. Some of the diagnostic chains are also pulling up in trade along with some pharma majors right here in trade. The real estate pack is also now coming back into the green. Yesterday there were sharp moves on across real estate board. Mitesh, we saw macro tech developers, Lodha, DLF, all of them shining pretty bright. Godrej Properties has been in thick momentum over the last few weeks. So is Prestige Estates as well. The likes of Sobha. How are you looking at these real estate stories built up, especially now when we will be looking at within a month or two, the RBI also look to probably ease the interest rate cycle, and that will be another fillip or another trigger point for all the real estate players because the demand could trigger from there too.
So our preferred pick Sakshi in the morning was DLF, if you remember. So I
Yeah.
think yes, this stock is looking promising. The entire space is looking promising. And as you mentioned yesterday, if you look at the stock, it was a marathon run. So the bargain hunters are coming back and they are buying at the lower level. We are of the view that technically what is looking very promising for us as of now is DLF at 834, 835. We are a buyer. And probably sooner than later, we will see the prices crossing around 900 and 920. And after a very long period of time, probably you will see DLF trading in four digits, that is above 1000. So, yes, this is a preferred pick as of now.
Okay, ladies and gentlemen, let's now pay attention to the Nifty. The losses are just 50 points left. And if you look at the 15-minute chart where we've had already 3 candles, the high of the first one was 24,436. Any move above 24,436 will entail a lot of short covering by bears. Again, 487, 490, the last 2 days highs will come into the picture. But my understanding is today we should see a close above 24,500, and that is something to be looked forward to. Why do I say that? For 2 reasons. One, the broader advance decline ratio in the market is good. Now 1815 shares are up in the green. Remember the last time I mentioned it was 1500 shares. 456 shares are now in losses. Earlier they were about 690. Sakshi and I tracked 19 indices for you. Out of 19, 13 are now in the green, and the rally is now led by the small cap index. 1 percentage point higher. Look at the advanced decline ratio. Out of 100 stocks, 85 are in the green. The mid cap index is 0.5% higher. Out of 100 stocks, 67 are in the green. And in the Nifty 500, 366 stocks out of 501 are in the green. The mojo on the long side is back. Lots of stocks are coming back into action. Some of them which were erstwhile favorites. Look at Persistent Systems, 1% higher, 57.23. Power Grid, 0.5% higher, 322.65. You have Tata Consumer, repair happening, 1% higher. Let's get Mitesh Bhai's views in. Remember, Tata Consumer was the first stock in the FMCG stable to go down 10-11% after disastrous earnings, and those are opportunities to buy into. Mitesh Bhai, Tata Consumer.
Yeah, so early signs of a recovery, a pretty steep fall from the recent high of around 1205 on 1st of October 2024. I'm sure we have not seen such a steep fall in a defensive stock like Tata Consumer for such a long period of time. So definitely this is a level to buy in. Since last 2 days, stock is offering an opportunity and trading at a comfortable zone where one could start accumulating the stock. So yes, at the current level, it's a clear-cut buy.
All right. Well, on that note, thank you so much, Mitesh, for being with us on this very special edition to share with us all your stock-related ideas. Once again, we wish you a very happy Diwali and the New Year's as well, and hope the festivities continue to brighten up your personal and professional lives going forward from here. Thank you so much for being with us on this edition. We'll start wrapping up the morning edition of Market Today. Now, viewers, 24,400, about 0.2% of a decline still on the Nifty. The Nifty Bank is also on the back foot, about 0.7% odd or so. 51,957 currently for the Nifty Bank. So after the surge yesterday, some retracement happening on the Nifty Bank. Sectors which are up are the broader markets. Small caps outperforming the, not just the broader markets, but also the benchmark indices, 1% higher for the small cap index as a whole. When we look at some stocks, Redington, JBM Auto, Ace Constructions, NBCC, Data Patterns, Angel One, ITI, Chambal Fertilizers, 361 WAM, Ircon International, these are the ones that are buzzing sharply in trade. Let's also look at some of the other pockets. Metals are now pulling up in trade, about 0.5% higher. Oil and gas is also up by 0.4%. FMCG, Realty, PSU banks, autos, infra, and slight gains that are coming in on the IT are somehow stemming the fall in the markets right now. What is not doing well? Private banks are taking a back foot today. Financial services also down by 0.7% odd. Pharma is now down by 1%. Consumer durables also nearly 1% lower in trade. These are the pockets that are low. On the top movers front, on the Nifty, you have BEL, Adani Enterprises, Coal India, Wipro and Adani Ports. Also Maruti Suzuki, Tata Consumer Products, Britannia and Tata Motors. But on the downside, you have stocks like Cipla, that's now down almost 4%. Dr. Reddy's, Sun Pharma, Shriram Finance, ICICI Bank now seeing some profits being shaved off, about 1.5% lower in trade on the Nifty. The PSU index, the Public Sector Enterprises Index, if you look at, there is almost a 1% up move on the PSE index, and therefore you actually see some of these stocks like BHEL, Coal India, Concor, NHPC, NMDC, Oil India supporting their sentiments in this space right here. When we look at the broader, the F&O space, it's Marico that's taking it away, over 5% gains for this one. Chambal Fertilizers, Canfin Homes now picking up pace, and Bharat Electronics are the other stocks that are up by about 3 to 5% in the F&O space right here. We'll try and wind up the edition right now, but remember viewers, we'll be tracking for you everything that is buzzing on the D Street throughout the course of the day, with of course festive discussions coming in with top market masters too. So stay tuned on Business Today Television. There's a lot more to really digest in trade today too.
And joining us now is Mr. Atul Kumar Goyal, the MD and Chief Executive Officer at Punjab National Bank. Namaste, Mr. Goyal. A very warm welcome to you, sir. And just let me brief our viewers with the numbers that have come in from PNB. They are fantastic, both on the bottom line and the top line. Net profit for the second quarter is up a whopping 145% to 4,303 crores year on year, and the net interest income rose 6% in the second quarter to 10,517 crores versus 9,923 crores. We'll be discussing other numbers, but Mr. Goyal, a fantastic performance. Please explain to our viewers, how did this 145% appreciation in the profit after tax happen? What contributed?
Thank you very much. It is the result of the hard work of the each and every employee of the bank also, and there is a all round performance. If you see the business growth also, there is a 12%, more than 12% growth in the credit. There is a good growth in the deposit also. Even the saving bank growth and the current account growth, that is also